हेलो दोस्तों, बिगिनर्स पॉइंट में आपका स्वागत है। और अभी हम कर रहे हैं इकोनॉमिक्स। ठीक है, इससे पहले के चैप्टर नहीं देखे तो प्लेलिस्ट बना रखी है, देख लेना। अब हम करेंगे चैप्टर नंबर 3, मनी एंड बैंकिंग। तो मनी इज़ द कॉमनली एक्सेप्टेड मीडियम ऑफ एक्सचेंज। मनी क्या है? कोई सामान लेते हैं हम, उसके बदले में क्या करते हैं हम? मनी हम उसको देते हैं। 10 रुपये के कुरकुरे लिए, जो कितने के होंगे? 10 रुपये के। तो फिर 10 रुपये हम उसे दे देंगे और अब जो भी सामान होगा कुरकुरे ले लेंगे। इन एन economy which consists of only one individual, there cannot be any exchange of commodities, and hence there is no role for money even if there is more than one individual, but these individuals do not take part in market transactions. Example: family living on an isolated island, money has no function for them. However, as soon as there is more than one economic agent who engage themselves in transactions through the market, money becomes an important instrument for facilitating these exchanges. Economic exchanges without the mediation of money are referred to as barter exchange. पहले क्या होता था? जब मनी नहीं था तो फिर अगर किसी को पार्ले का बिस्कुट का पैकेट चाहिए तो फिर बदले में क्या देगा वो? पार्ले के बिस्किट के बदले में क्या करेगा? कोई सामान देगा। वो क्या दे देगा? आलू भुजिया दे देगा। ठीक है, या फिर उसको मैगी दे देगा। ठीक है, इसको कहते थे बार्टर सिस्टम, सामान के बदले में सामान। However, they presume the rather improbable double coincidence of wants. Consider, for example, an individual who has a surplus of rice which she wishes to exchange for clothing. If she is not lucky enough, she may not be able to find another person who has the di- diametrically opposite demand for rice with a surplus of clothing to offer in exchange. इसमें समस्या क्या थी बार्टर सिस्टम में? अगर जैसे किसी को क्या चाहिए? क्लोथ चाहिए, और उसके पास राइस हैं, तो फिर सामने वाले को भी राइस चाहिए हो तभी लेगा वो अपने क्लोथ तभी देगा जब राइस उसके पास होंगे, वो उसको चाहिए होंगे। The search costs may become prohibited as the number of individuals increases. Thus, to smoothen the transaction, as intermediate good is necessary which is acceptable to both parties. Such as good is called money. पहले क्या होता था? पहले था बार्टर सिस्टम। अब पहले इसको समझ लेते हैं, बार्टर सिस्टम क्या था। सामान के बदले में सामान। जैसे मेरे पास चावल बहुत ज़्यादा है और मुझे चाहिए कपड़े, क्लोथ चाहिए, तो फिर मैं ऐसा ग्राहक ढूंढूंगा जिसको चावल चाहिए होंगे, यानी कि राइस चाहिए होंगे। ऐसा कस्टमर ढूंढना पड़ेगा जिसको राइस चाहिए होंगे तभी वो, और उसके पास कपड़े होने चाहिए। समझ रहे हो? मान लो किसी के पास क्या है, किसी के पास शुगर है, किसी के पास वीट है। ठीक है, अब ये 3 लोग हैं और यहाँ पर ये जो राइस वाला है, राइस वाले को चाहिए क्लोथ, लेकिन क्लोथ वाले को राइस नहीं चाहिए, इसको क्या चाहिए? शुगर। तो फिर राइस वाला शुगर के पास जाएगा। ठीक है, शुगर वाले से क्या लेगा? और इसको शुगर वाले को भी नहीं चाहिए, शुगर वाले को राइस नहीं चाहिए, शुगर वाले को चाहिए वीट, वीट वाले को चाहिए राइस। ठीक है, जिसको वीट चाहिए उसको चाहिए राइस, और जिसको राइस चाहिए वो मांग रहा है क्लोथ, और जो क्लोथ चाहिए वो उसे चाहिए शुगर, और जो शुगर चाहिए उसे चाहिए वीट। ठीक है, तो राइस वाले को चाहिए क्लोथ। अब वो क्या करेगा? वो सबसे पहले जाएगा वीट वाले के पास, उसे राइस देगा और उससे लेगा वीट, यानी कि गेहूँ। ठीक, अब जब गेहूँ ले लेगा तो उसके पास जाएगा चीनी वाले के पास, चीनी वाले को चीनी देगा और उसके बदले वो चीनी लेगा और उसके बदले क्या दे देगा उसे? गेहूँ। अब इसके पास आ गई शुगर। अब इसको क्या चाहिए था? क्लोथ। अब इस जाएगा इधर क्लोथ लेने, अब क्लोथ लेगा और इसके बदले इसको देगा शुगर। तो ये जो राइस वाला है इसको 3 जगह जाना पड़ा। ठीक है, उसके थोड़े टाइम बाद क्या आ गया? कॉइन सिस्टम आ गया। कॉइन चलने लग गए, मुद्राएं चलने लग गई। तो राइस वाले ने क्या करा? अपने राइस बेचे, उससे कॉइन लिए। अब वो उस कॉइन को वो कहीं पे भी जा सकता है, क्लोथ वाले से क्लोथ ले सकता है, शुगर वाले से शुगर ले सकता है, और गेहूँ ले सकता है, इस तरीके से। ठीक है, ऐसे था बार्टर सिस्टम, और इस वजह से ख़त्म करना पड़ गया क्योंकि ज़्यादा टाइम लगता था एक जन को मार्केट में घूमते फिरते रहते थे बेफालतू इधर से उधर। ठीक है। The individuals can then sell their produce for money and use this money to purchase the commodities they need. यही लाइन लिखी है। दो facilitation of exchanges is considered to be the principal role of money. It serves other purposes as well. Following are the main functions of money in modern economy. Functions of money. As explained above, the first and foremost role of money is that is it acts as medium of exchange. तो मनी को हम क्या कह देंगे? मीडियम ऑफ एक्सचेंज। ठीक है। barter exchange become extremely difficult in large economy because of the high cost people would have to incur looking for suitable persons for exchange their surpluses. Money also acts as a convenient unit of account. The value of all goods and services can be expressed in monetary units. When we say that the value of a certain wrist watch is rupees 500, when me 500, we mean that the wristwatch can be exchanged for 500 units of money, where a unit of money is rupee in the case. If the price of a pencil is rupees 2 and that of a pen is rupees 10, we can calculate the relative price of a pen with respect of a pencil. Which a pen is worth 10 divided by 2 equals to 5 pencils. The same notion can be used to calculate the value of money itself with respect to other commodities. In the above example, a rupee is worth 1 divided by 2 equals to zero point 0.5 pencil, or 1 divided by 10 equals to zero point 0.1 pen. Thus, if prices of all commodities increase in terms of money, that is, there is a general increase in the price level, the value of money in terms of any commodity must have decreased, in the sense that a unit of money can now purchase less of any commodity. We call it a deterioration in the purchasing power of money. A barter system has other deficiencies. It is difficult to carry forward one's wealth under the barter system. Suppose you have an endowment of rice which you do not wish to consume today entirely. You may regard this stock of surplus rice as an asset which you may wish to consume or even sell off for acquiring other commodities at some future date. But rice is perishable item and cannot be stored beyond a certain period. Also, holding the stock of rice requires a lot of space. You may have to spend considerable time and resources looking for people with a demand for rice when you wish to exchange your stock for buying other commodities. This problem can be solved if you sell your rice for money. Money is not perishable and its storage costs are also considerably lower. It is also acceptable to anyone at any point of time. Thus, money can act as a store of value for individuals. Wealth can be stored in the form of money for future use. However, to perform this function well, the value of money must be sufficiently stable. A rising price level may erode the purchasing power of money. It may be noted that any asset other than money can also act as a store of value. Example: gold, landed property, houses, or even bonds, to be introduced shortly. However, they may not be easily convertible to other commodities and do not have universal acceptability. ठीक है। अब इसमें क्या कह रहा है, मनी की जगह पे और भी कोई चीज़ एक्सचेंज वाली हो सकती है, जैसे गोल्ड हो सकता है। ठीक है। या फिर क्या हो सकता है, हाउस हो सकता है, प्रॉपर्टी हो सकती है, ये सब चीज़ें हो सकती हैं। Some countries have made an attempt to move towards an economy which uses less of cash and more of digital transactions. A cashless society describes an economic state whereby financial transactions are not connected with money in the form of physical banknotes or coins, but rather through the transfer of digital information, usually an electronic representation of money, between the transacting parties. In India, government has been consistently investing in various reforms for greater financial inclusion. During the last few years, initiatives such as Jan Dhan accounts, Aadhaar-enabled payment systems, e-wallets, National Financial Switch (NFS), and others have strengthened the government resolve to go cashless. Today, financial inclusion is seen as a realistic dream because of mobile and smartphone penetration across the country. Demand for money and supply of money. Demand for money. The demand for money tells us what makes people desire a certain amount of money since money is required to conduct transactions. The value of transactions will determine the money people will want to keep. The larger is the quantum of transactions to be made, the larger is the quantity of money demanded. Since the quantum of transactions to be made depends on income, it should be clear that a rise in income will lead to rise in demand for money. Also, when people keep their savings in the form of money rather than putting it in a bank which gives them interest, how much money people keep also depends on rate of interest. Specifically, when interest rates go up, people become less interested in holding money since holding money amounts to holding less of interest earning deposits and thus less interest received. Therefore, at higher interest rates, money demanded comes down. Supply of money. In a modern economy, money comprises cash and bank deposits. Depending on what types of bank deposits are being included, there are many measures of money. These are created by a system comprising two types of institutions: central bank of the economy and the commercial banking system. Central bank is a very important institution in a modern economy. Almost every country has one central bank. India got its central bank in 1935. इंडिया को सेंट्रल बैंक कब मिली 1935 में. Its name is the Reserve Bank of India. Central bank has served several important functions. It issues the currency of the country. It controls money supply of the country through various methods like bank rate, open market operations, and variations in reserve ratios. It acts as a banker to the government. It is the custodian of the foreign exchange reserves of the economy. It also acts as a bank to the banking system, which is discussed in detail later. From the point of view of money supply, we need to focus on its function of issuing currency. This currency issued by the central bank can be held by the public or by the commercial banks and is called the high powered money or reserve money or monetary base, as it acts as a basic basis for credit creation. Commercial banks are the other type of institutions which are a part of the money creating system of the economy. In the following sections, we look at the commercial banking system in detail. They accept deposits from the public and lend out part of these funds to those who want to borrow. The interest rate paid by the banks to depositors is lower than the rate charged from the borrowers. This difference between these two types of interest rates, called spread, is the profit appreciated by the bank. The process of deposit and loan creation by banks is explained below. In order to understand this process, let us discuss a story. Once there was a goldsmith named Lala in a village. In this village, people used gold and other precious metals in order to buy goods and services. In other words, these metals were acting as money. People in the village started keeping their gold with Lala for safekeeping. In return for keeping their gold, Lala issued paper receipts to people of the village and charged a small fee from them. Slowly, over time, the paper receipts issued by Lala began to circulate as money. This means that instead of giving gold for purchasing wheat, someone would pay for wheat or shoes or any other good by giving the paper receipts issued by Lala. Thus, the paper receipts started acting as money since everyone in the village accepted these as a medium of exchange. Now let us suppose that Lala had 100 kg of gold deposited by different people and he had issued receipt corresponding to 100 kgs of gold. At this time, Ramu comes to Lala and asks for a loan of 25 kgs of gold. Can Lala give the loan? The 100 kgs of gold with him already has claimants. However, Lala could decide that everyone with gold deposits will not come to withdraw their deposits at the same time, and so he may as well give the loan to Ramu and charge him for it. If Lala gives the loan of 25 kgs of gold, Ramu could also pay Ali with these 25 kgs of gold, and Ali could keep the 25 kgs of gold with Lala in return for a paper receipt. In effect, the paper receipts acting as money would have risen to 125 kgs now. It seems that Lala has created money out of thin air. The modern banking system works precisely the way Lala behaves in this example. Commercial banks mediate between individuals or firms with excess funds and lend to those who need funds. People with excess funds can keep their funds in the form of deposits in the banks, and those who need funds borrow funds in the form of home loans, crop loans, etc. People prefer to keep money in banks because banks offer to pay some interest on any deposit made. Also, it may be safer to keep excess funds in a bank rather than at home, just as people in the example above prefer to keep their gold with Lala instead of keeping at home. In the modern context, given checks and debit cards, having a demand deposit makes transactions more convenient and safer even when they do not earn any interest. Imagine having to pay a large amount in cash for purchasing a house. What does the bank do with the funds that have been deposited with it? Assuming that not everyone who has deposit funds with it will ask for their funds back at the same time. The bank can loan these funds to someone who needs the funds at interest. Of course, the bank has to be sure it will get the funds back at required time. So the bank will typically retain a portion of the funds to repay depositors whenever they demand their funds back and loan the rest. Since banks earn interest from loans they make, any bank would like to lend the maximum possible. However, being able to repay depositors or demand on demand is crucial to the bank's survival. Depositors would keep their funds in a bank only if they are fully confident of getting them back on demand. A bank must therefore balance its lending activities so as to ensure that sufficient funds are available to repay any depositor on demand. Money creation by banking system. Banks can create money in a manner similar to that as given in Lala's story. Banks can lend simply because they do not expect all the depositors to withdraw what they have deposited at the same time. When the banks lend to any person, a new deposit is opened in that person's name. Thus, money supply increase to old deposits plus new deposits plus currency. Let us take an example. Assume that there is only one bank in the country. मान लेते हैं हम SBI है. Let us construct a fictional balance sheet for this bank. कोई भी balance sheet मान लो. Balance sheet is a record of assets and liabilities of any firm. Conventionally, the assets of the firm are recorded on the left hand side and liabilities on the right hand side. Accounting rules say that both sides of the balance sheet must be equal or total assets must be equal to the total liabilities. Assets are things a firm owns or what a firm can claim for others. In case of a bank, apart from buildings, furniture, etc., its assets are loans given to public. When the bank gives out loan of rupees 100 to a person, this is the bank's claim on that person for rupees 100. Another asset that a bank has a reserve. Reserve are deposits which commercial banks keep with the central bank, Reserve Bank of India (RBI), and its cash. These reserves are kept partly as cash and partly in the form of financial instruments, bonds, and treasury bills issued by the RBI. Reserves are similar to deposits we keep with banks. We keep deposits, and these deposits are our assets. they can be withdrawn by us. Similarly, commercial banks like State Bank of India, SBI, keep their deposits with RBI, and these are called reserves. Assets is equal to reserve plus loan. Liabilities for any firm are its debts or what it owes to other. For a bank, the main liability is the deposits which people keep with it. Liability is equal to deposits. The accounting rule states that both sides of the account must balance, hence if assets are greater than liabilities, they are recorded on the right hand side as net worth. Net worth equal to assets minus liabilities. Balance sheet of a fictional bank. Let our fictional bank start with deposits liabilities equal to rupees 100. This could be because Mr. Fernandez has deposited rupees 100 in the bank. Let this bank deposit the same amount with RBI has reserve. Table 3.1 represents its balance sheet. Balance sheet of a bank: assets and liabilities, reserve 100 rupees, deposits 100 rupees, net worth 0. Total 100 हो गया बराबर. If we assume that there is no currency in circulation, then the total money supply in the economy will be equal to 100. M1 equals to currency plus deposits equals to 0 plus 100 is equal to 100. Limits to credit creation and money multiplier. Suppose Mr. Matthew comes to this bank for a loan of rupees 500. Can our bank give this loan? क्या उन्हें बैंक से लोन मिल जाएगा? क्या बैंक उन्हें लोन देगी? If it gives the loan and Mr. Matthew deposits the loan amount in the bank itself, the total bank deposits and therefore the total money supply will rise. It seems as though the banks can go on creating as much money as they want. But is there a limit to money or credit creation by banks? Yes, and this is determined by the central bank RBI. The RBI decides a certain percentage of deposits which every bank must keep as reserve. This is done to ensure that no bank is overlending. This is a legal requirement and is binding on the banks. This is called the required reserve ratio. मतलब कि RRR और the reserve ratio और cash reserve ratio यानी कि CRR. ये दोनों एक ही चीज़ है. कितना हम कैश बैंक में रिजर्व करके रखते हैं कि कोई भी आ जाए तो पैसे दे सकें, उसे कहते हैं हम कैश रिजर्व रेशो. कैश रिजर्व रेशो इक्वल्स टू परसेंटेज ऑफ डिपॉजिट विच अ बैंक मस्ट कीप हैज कैश रिजर्व विद द बैंक. बैंक अपने पास कितना पैसा रखेगी उसे बोलते हैं CRR. ये कौन डिसाइड करता है? ये डिसाइड करता है RBI. अपार्ट फ्रॉम द CRR, banks are also required to keep some reserves in liquid form in the short term. This ratio is called statutory liquidity ratio, SLR. SLR किसे बोलते हैं? Statutory liquid ratio. कितना पैसा कैश के फॉर्म में रहेगा उसके पास शॉर्ट टर्म पीरियड के लिए. और जैसे कि गोल्ड भी रहता है और भी चीज़ें रहती हैं, बॉन्ड वगैरह, वो सब अलग आ गया. In our fictional example, suppose CRR equals to 20%, then we deposit of rupees 100. Our bank will need to keep rupees 20% of 100 has reserve ratio. मतलब कि अगर 20% CRR चल रहा है तो उसको 20% जितना भी बैंक में कैश है उसका 20% रखना पड़ेगा. Only the remaining amount of deposits, that is rupees 80, 100 minus 20 equals to 80 can be used टू गिव लोन. 80 रुपीज़ क्या करेगा? उसका लोन के लिए कर देगा. अगर किसी ने बैंक ने 80 रुपये का लोन दे दिया और 20 रुपये बचे हैं और CRR क्या चल रहा है? 20% चल रहा है, जो कि उसे रखना जरूरी है, तो फिर वो आगे लोन देने के लिए मना कर देगा. द स्टैट्यूटरी रिक्वायरमेंट ऑफ द रिजर्व रेशो एक्ट्स हैज अ लिमिट टू द अमाउंट ऑफ क्रेडिट दैट बैंक्स कैन क्रिएट. We can understand this by going back to our fictional example of an economy with one bank. Let us assume that our bank starts with a deposit of rupees 100 made by Leela. The reserve ratio is 20%, thus our bank has rupees 80. 100 minus 20 to lend, and the bank lends out rupees 80 to Jaspal Kaur, which shows up in the bank's deposits in the next round has liabilities, making a total of rupees 180 has deposits. Now our bank is required to keep 20% of 180, that is 36, has cash reserve. Recall that our bank had started with rupees 100 as cash. Since it is required to keep only 36 as reserve, it can lend 64 again. 100 minus 36 equals to 64. The bank lends out 64 to Junaid. This in turn shows up in the bank has deposits. The process keeps repeating itself till all the required reserve become rupees 100. The required reserve will be rupees 100 only when the total deposits become rupees 500. This is because for deposits of rupees 500, cash reserve would have to be rupees 100. 20% of 500 equals to 100. The process is illustrated table in 3.2. Round deposit in बैंक required reserve ratio and लोन मेड बाय बैंक. 100 रुपये हैं, CRR 20 है तो 80 रुपये का लोन दे सकता है. 180 रुपये बैंक में डिपॉजिट किए हैं, 36 रुपये CRR चल रहा है, मतलब 20% चल रहा है तो 64 रुपये वो दे सकता है. ऐसे ही अगर 500 है तो 100 रुपये दे सकता है और 400 वो 100 रुपये रखेगा अपने पास, 400 रुपये देगा. The first column lists each round. The second column depicts the total deposits with the bank at the beginning of each round. 20% of these deposits need to be deposited with the RBI has required reserves. Column 3. What the bank lends in each round gets added to the deposits with the bank in the next round. Column 4 indicates he the loans made by the banks, assets or liabilities. Reserve 100, deposits 100 plus 400 is equal ये 500, लोन्स 400 रुपये का दे दिया, टोटल 500 और ये 500 बराबर हो गया सब हिसाब किताब. इसके बाद आ जाते हैं. सिंस द बैंक इज ओनली एक्सपेक्टेड टू कीप 20% ऑफ इट्स डिपॉजिट्स एज रिजर्व, दस रिजर्व ऑफ वन रुपीज 100, 20% of 500 equals to 100 can support the deposits of rupees 500. In other words, our bank can give a loan of rupees 400. Table 3.3 demonstrates its balance sheet. M1 equals to currency plus deposits, 0 plus 500 equals to 500. Thus money supply increase from rupees 100 to 500. Given a CER of 20%, the bank cannot give a loan beyond 400. Hence requirement of reserve acts as a limit to money creation. Money multiplier 1 divided by CRR. In our example, money multiplier 1 divided by 20%, 1 divided by 1.2 equals to 5. Thus reserves of rupees 100 create deposits of rupees 5 into 100 equals to 500. Policy tools to control money supply, इसको पढ़ेंगे कल.